Hello, and thank you for joining us at xm.com for this Forex Preview video. I'm Cristina Marujos. Joining me today is investment analyst Cristina Bartenido, and we'll be having a look at the all-important OPEC Plus meeting on Thursday, where it will be decided if there will be an increase in oil supply. Now, Cristina, markets are anticipating an addition of 500,000 barrels per day. Is that the most probable scenario?
That's right, Christina. It seems that the impressive rally in oil prices has been very attractive to oil exporters, and therefore oil producers have been pushing OPEC to remove some of its carbs on production. Oil prices have rallied around 70% over the past year and are almost near pre-pandemic levels thanks to the vaccine news and hopes that the reopening plans around the globe can boost the pace of recovery this year and therefore demand for the commodity. So oil prices could experience larger revenues if OPEC decides to remove its supply restrictions. OPEC has been gradually increasing productions in the past 2 months, and it is highly expected to release another 500,000 barrels per day, more in April. Though, interestingly, there are rumors that Saudi Arabia could also stop its voluntary 1 million supply cut, but whether these will be fully resumed or will be partially restored remains to be seen, and that is because nothing is certain about how effective the vaccines will be and when lockdown measures will be entirely removed. So, as Saudi Arabia expressed recently, the OPEC should be careful with any supply increases. I don't think that the group would like to see its supply increases remaining in the storage in case demand proves not sufficient enough because of the lockdown restrictions. So probably Saudi Arabia may think twice before fully stopping its voluntary cuts. Of course, it wouldn't like to have new troubles with Russia, who has been stubbornly calling for higher production, so it will likely show some willingness to increase supply. So on the other hand, the manufacturing activity in China, which is the second largest oil consumer after the US, has been trending downwards, and the number of oil future contracts have been also in a negative downward move. So that suggests that OPEC perhaps shouldn't open its taps very wide yet.
Of course, this meeting is important for oil prices. The output decision is likely to affect the price going forward. So what is the outlook for oil in the short term?
How prices may react, that may depend on how big the extra production will be. Currently, the range is between 500,000 and 1.5 million barrels per day, including Saudi Arabia's voluntary cuts. So if the output increase is too little, closer and closer to the lower boundary of this range or below that range, then we may see oil prices rallying again. On the other hand, if OPEC shows stronger optimism about the economic recovery and signals that the 1.5 million supply increase or more than that should be released to meet the rising demand, then that could pressure oil prices lower. But overall expectations are for the demand to outpace supply this year. So I think the market will remain bullish overall, at least in the near term. So any disappointment this week probably will not be enough to change the upward trend in oil prices.
Cristina, thank you for joining me today, and thank you for watching this Forex Preview of the OPEC Plus meeting on Thursday here at xm.com.